Let's start off with how the bond market responded. Well, you being a bond trader, how did you respond to the surprise interest rate cut?
Well, as you said, it was a surprise, and it was a very interesting day on the bond market today. Really against market consensus, the central bank cut interest rates by 50 basis points. It wasn't expected by the group of economists that put out market consensus, and it wasn't expected by us on the Absa Capital Bond Desk, so we spent a few minutes buying some bonds to cover some positions. But what was interesting about the central bank decision was that it was unanimous, which was surprising given that it wasn't market consensus. But also what was surprising was how much the strong level of the currency was given attention. Now, as a result of that interest rate cut, the one-year swap moved down by about 30 basis points. We saw the R157 benchmark bond rally initially about 25 basis points and give back some of those gains. We also saw a knee-jerk 1% loss in the strength of the currency in the rand.
Where to from here, though, for bonds and for the rand? Do you think it's just a knee-jerk reaction? Do you think we'll see some stability as the days go by?
Well, what's been interesting about what's been driving the bond market and also the currency market, certainly for the first quarter of this year, we've been the beneficiary of large amounts of foreign inflows. Now, emerging market dedicated funds have really been receiving inflows because emerging market economies are expected to outperform the developing market peers for the remainder of the year. Now, we expect this to continue. What happens now with the central bank having cut interest rates in South Africa is that local asset prices now become somewhat more attractive. So we'd expect to see the large amounts of foreign inflows in both bonds and equities to continue. So perversely, somewhat ironically, you could see the central bank having cut interest rates provide an underpin to the currency as foreigners continue to buy bonds and equities.
It's interesting because the Reserve Bank governor did allude to the fact that the rand is relatively strong and it is hurting South Africa's economy in many ways. So do you think it's going to have the opposite effect as opposed to the desired effect of weakening the rand?
Well, look, we did see a knee-jerk reaction weakening in the currency. Now, you know, the strength of the currency, given that we're an export-led economy, always is somewhat of a concern for mining and for manufacturers. But we have seen what was really interesting. The data we've seen lately has been very strong. You know, the Q4 GDP data at 3.2% really was an upside surprise. That's not an indicator of an economy that's really struggling under the weight of a very strong currency. So that's why today's interest rate cut was somewhat of a surprise.
With an inflation outlook of 4.9% for the third quarter of this year and 4% for 2011, where to from here for the bond market?
Well, what's interesting, the interest rate cut in the bond market is certainly going to be bullish for bonds. Today we saw the curve steepen as it rallied. Now, as you've seen, and the central bank cut rates, which wasn't entirely expected, the front end of the curve is going to outperform the back end. You start to see the back end of the curve take somewhat cognizance of inflation expectations going forward, but from here on forward, we'd expect bonds to rally from here. Now, what's not clear is whether we're going to see further rate cuts, but given that the central bank's cut rates unexpectedly and left the door open for further cuts, we'd expect bonds to perform quite well from here.
Daniel, thank you very much for your time today. That was Daniel Savison from Absa Capital. Still with me is Deryck Janse Van Rensberg from BOE. Deryck, would you be buying into the bond market right now? Good time to get in?
I think so. I think exactly what the young gentleman there said is he's 100% right. So, you know, whenever a market is surprised like with what we did see today, there is going to be a knee-jerk reaction. And I think that the fact that we've left the door open for possible further rate cuts, personally, I don't think that it is necessary, but the door is open, then you could start to see a rally in the bond market.
Looking at the top 40, MTN down 5.25%. That's quite a big drop in one day, and I suspect perhaps it has something to do with MTN and, the Bharti Airtel deal with Zain, and of course one of the big African competitors, which is directly in competition with MTN.
Correct, and what you've got to see is you've got to look at it from a market share point of view. And you know, a few months ago when Bharti was looking at MTN, you know, the share price was rallying on that, and it was because they were possibly going to take, you know, world market share in the telecom sector. Now that has split away, Bharti need to grow, and the only way they're going to do that is through mergers and acquisitions. You've seen it happen now with Zain, and I think that there is definitely a lot of reweighting that's going on in probably some foreign portfolios, and there might be some foreign selling that's taking place in MTN as we approach the close today. And it was just more a question of saying, right, MTN are losing market share, and you could see them, come under pressure, and they need to look at expanding as well.
We saw Anglo Gold down 0.72%. That was the second worst performer on the top 40 today. So quite a big move from 5.23% for MTN and 0.72 for Anglo Gold. But no surprise, because we have seen massive moves on the euro dollar, which is translated into commodity prices coming under pressure. Looking at the overall commodity space, a lot is reliant in what we've been seeing in the euro dollar, and of course the sovereign debt issues which have emanated from Europe.
Correct. I think that, gold stocks are very erratic, and obviously we saw a lot of confidence come back into the market on the rate cut. There might have been a bit of risk appetite coming back out of the gold stocks and into, other underlying equities. Then obviously with the sovereign debt problem that you're seeing at the moment, there's a lot of shift happening in the currency, money moving in and out of the dollar at the moment, and obviously the euro as well. So I think that going forward there is that risk appetite, and there's definitely still a strong foreign inflow into emerging markets, and that risk appetite is still there. You might have moments of hiccups, but again, I reiterate, you've got to see weakness as a buying opportunity.
Top of the top 40, PPC a gain of almost 4%. We had Anglo up almost 2%. Your view on PPC?
We mentioned construction stocks earlier, and I actually was watching the likes of Avenge, PPC, as well as Murray & Roberts, Wilson Bailey, and on that surprise cut, they all actually rallied and they had a really good performing day. They've just released all their results, the construction sector, and they were quite disappointing, except the likes of the Basil Reeds. But, that's all in the price now, and going forward, they should start to have some earnings kickers. I like PPC, it's got a nice dividend yield, and I think you should start to see a little bit of uptick in the construction sector.